Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Well, good morning, good afternoon, good evening. Welcome to Develop Your Edge with Anthony Crudele. I'm your co-host, Tom Schneider, CMT with NinjaTrader. And this week we have a great topic, how to go big. That's the topic this week. And it's my pleasure to welcome, as usual, Anthony Crudele to the show. How you doing, Anthony?
I am doing great, Tom. Little technical difficulty on my part, everybody, but we got here. We're going to still end at 11. And so we've got a jam-packed show for the next 15 minutes. And so I think maybe we just get right into it today.
Let's go. Let's go.
So I put a tweet out the other day, and maybe we share the screen. I want to talk about this the other day. It was actually just last night. And I was thinking about this show today. And part of me was thinking about, okay, when what am I going to talk about with this? Because I get this question a lot. People are like, Anthony, when you talk about big, small, not at all. Why don't you talk about when we should trade big? And I said, as a new trader, I made a big mistake being defensive when winning and aggressively when losing. I blew all my accounts at the tail end of my losing streak. Success came when I flipped my mindset, being assertive when winning and defensive when losing, a crucial psychological shift. So that was the tweet that really, I would say it really kind of changed my whole trajectory as a trader. I mean, obviously not this tweet, but this mindset behind it, right? And it was about those moments of when to trade big. Most of you out there have been in these situations where you start off with a small account, you want to turn it into something bigger, of course, right? You have all of these dreams about, becoming a bigger trader and doing all of this, and you're super good at your risk management for the first, say, 3 months, right? And then all of a sudden that account dwindles down a little bit, and you're like, oh, you know what? I've been doing this for 3 months, 6 months, a year, however long it is. Then you get frustrated. Then you trade a little bit bigger because you're just kind of like throwing the chips in. It's almost a cry for help. And you're like, you know what? I don't care at this point. I want it to be either get me out of it or this, I'm going to let this trade, work out. And psychologically, I was in that spot several times in my career, and I was thinking about it, and I would go back and I would look at my numbers, and I would be like, I'd hit my numbers for 15 out of 20 days for the month, right? I tried to make $300 to $500 when I first started a day. And I'd look, and then at the end of the month, I'd have like this, a couple of days where I lose, a couple scratches, pay some bills, and I'd be like, wow, I really didn't make any money. Then I would go back and I would look at all of my trades, and I would see that it says, or I would, when I was looking at them, they were printed. We didn't have the digital aspect back then. And I would look at them and I'd be like, man, look at today, you traded 6 aside up 550. Next day, 4 aside up 600. Next day, 7 aside. These are trading the biggie minis, or they're the biggie minis now, even though they're called minis, or the big contracts. And I would look at it and be like, man, I'm barely trading, and I'm done by 10:30 on the train home, having breakfast, making my number all the time. Then I go to these days where I'd see where I would be trading, 147 aside, up $120, actually down money with fees, right? Next day, down 575, 330 aside, right? And I'd be like, and I would look at this and I'd be like, wait a minute, man. You're doing the exact opposite of what you're supposed to be doing. The days you're up and you're making money, you've got to keep trading. If you remember the Wall Street movie, I don't have my Wall Street poster behind me, but you remember that scene when Gecko calls him in the morning and he goes, oh man, I wish you were here right now. Just wired over, I can't remember how many Hong Kong, whatever it was that he had made. It's been a while since I saw that, and he goes, you did good, but you got to keep doing good, Bud Fox. And it's funny when you think about that, It's because when you're doing good, you just take a little breather and you're kind of like, oh yeah, everything's great. You know, I hit my number. I feel good about it. And you keep doing it. And in reality, when you're doing good, you got to keep doing good. And so psychologically, I started to change the way I thought about things. When I was doing good, I would really, really stay focused on trying to add to that day, whether it was incrementally or I would start to test myself with bigger position size. And the reason why is because in those moments, I was making money. I was up a little on the day, probably up a little on the week. At that moment, I could afford to take on a little bit more risk. I also have the momentum behind me. I have the market saying that, look at your strategy is actually working pretty well. Keep trading, right? You have all this feedback that you're getting versus just looking at a dollar amount. And so when I started to think that way, I said, okay, now get a little picky with your favorite setups. Stay there, wait. If you get them on those days, step in, trade a little bit bigger, get in a little bit quicker with your size. Because remember, at that point, you've got the market respecting your strategy and you've been making some money. And when you get bigger right away, if it doesn't work, you maybe just peel some off right away, or you go back to being a really good risk manager. Not that you were ever not, but that the point is at that moment, you try to step on the gas a little bit. That's how you test yourself. That's how you go to the next level. You don't go to the next level by just being perfect, trying to make your $500 a day for 20 days in a month. And the next month you're going to make 600 or you're going to make 700. Most people are thinking that, and I think in the wrong way. You don't really grow that way. This business is about moments. I've been pounding the table about that on social media and shows for the last decade. I've been saying this over and over again. One of my cringiest tweets that I see people put out, not my tweets, what other people put out, is when they say, oh, $500 a day adds up. It's $10,000 a month. Nonsense. It doesn't. Yeah, mathematically that's the case, but there's so many variables throughout the year to where when the market is giving you everything that you really want, you need to be capitalizing on that. And when it's not, you have to really psychologically change your mind and be like, you know what? When it's not giving it to me, you have to be just as firm as when you were trying to be big. You have to try and be small or not at all. And it really, in my opinion, this is probably the number one thing that took me away from just being a guy who was barely paying the bills and making money to eventually being like, I could do this for a living. Because in those moments, I understood that from the feedback, from the mindset, from everything that was going on. And this is not about technicals. And I know some people are like, oh, Deli's going to show us some reason, some trade that we should step in all big. No, it doesn't matter. It's not about that. It's all about that timing of those moments when you're really in a great place. One quick story before I bring Tom back in. The first day I ever made a six-figure day, I made over 100,000 in a day. And it was really what led up to that point. It was me just doing everything right, and everything was just clicking for me. And so I remember that day like it was yesterday. I went in. It was really only about a 15 handle range in the S&P. And because I had been doing so well, I started off the day right away with a good winner. And I'm like, oh, I'm up some money, right? Next thing you know, I'm up $5,000, $10,000. Well, let me try and push this. The day just kept respecting my levels. It was one of those things where it was just like everything I touched was a winner. What did I do? I continually traded a little bit bigger, right? I continue to do it. I continue to push a little bit. And at that point, I realized that, look at Anthony, when things are going your way and you have momentum, just as what the market does, when it has momentum and it keeps going, you have to keep going. You have to trade bigger when all of these things are working for you. Mindset. You're in the right financial position at that moment. You have the momentum from the market by respecting your strategy. That's when you could step in and look at your strategy and say, this is a time to trade bigger.
Yeah, and Anthony, in the sports world, I think of baseball and I think of when you can see the ball well, swing away. And that's kind of the same thing, right? When you are seeing the market and it's doing what you are thinking it's going to do, you got to step on that gas and rather than putting in a really tight stop so you don't lose money, acting timidly. When you're seeing the field, you've got to take advantage of that, because you're right. $300 to $500 a day to start out, all it takes is 1 or 2 days to get behind that. And now you're acting out of desperation rather than confidence.
Exactly. Think about how many of you out there are probably up like $950 for the day, and you try to make that extra $50 to make $1,000, and you get so tight and so tense, and you've totally lost sight of how you got up 950. And people were asking me, they're like, well, Anthony, what do I do about this? And I said, I'm not a shrink. I said, so my advice might come off a little bit harsh, but for me, it's about how will I look at myself the next day if I don't do the right thing in the moment. So I started to say to myself, you're going to hate yourself if you don't keep doing this. Just as like when it's not really good, I'm going to hate myself if I keep trading. Like there's been a few days over the past couple of weeks where literally I've left down, a few bucks, and I'm just sitting there going, thank God I did that, because otherwise I probably would have gotten chopped up. And the reality is, if I can remove myself from that position, I have to equally be as disciplined and mentally strong to put myself in the opposite of that position when the market is giving me everything I want. Look at all of these big hedge fund guys out there. They will always look at when they have a good trade, they are just pounding it. And because as things are getting better for them and they're seeing that it's working, that's how they make their money, right? They're doing it by a few really big trades. It was interesting. I don't know if you guys saw that Ackman interview. I took actually quite a lot from that. I've been a little bit of, he's not really always been my favorite guy, but I actually, when you hear how he's grown as a trader, I thought that was very interesting, and how, he's stepped back and he's really looked at and really honed it in on some of the most simple things, some of the most simple setups. He said he's kind of, as Warren Buffett puts it, and I know it's very different what they're doing than us as day traders, but the thought process is, if he finds something he really likes and it's working, he's just not going to fight it. He'll stay with it. And he now feels, it's funny, as the older he is, and myself and a lot of these other traders have been doing this for a long time, we actually feel like we have more time now. And so when we feel like we have more time, when the market finally gives us what we want, we have to take it, because at that moment, we have to recognize that is the time to do it. And the other times aren't. And so really trading big is probably the most psychological shift that you have to make as a trader to change that kind of mindset.
Yeah. And you mentioned time. Our friend Larry Williams says time is can be your best asset, right? When you're trading.
And look at Larry. How old is Larry? I think he's got to be, I don't want to say how old he is on here. He's going to get mad at me, but Larry's got to be 80 or 80s.
He's been doing this for, I think, nearly 60 years.
Yeah. So
he's been solvent the whole time. That's an understatement, Larry.
I love that guy. Let's go to the charts real quick, Tom, because I know I always want to touch base on it. I want to talk a little bit about today. I want to talk a little bit about some color and what I'm seeing in the market. So this is something I want everybody to keep a close eye on right now. What's interesting about this market right now that we've not seen a lot in the past when we're going down is, when we've been going down a lot in the past, people have been trained for V-type bottoms. I'm not saying we're not going to get one, but the market is in no hurry to find a low right now. And it's actually very different than what we've seen in the past. And it can be very frustrating. Anytime you have a market that's grinding in a direction like we are right now, I was saying this in our Discord a lot lately, that actually makes me more bearish. And the reason is because look at every bull market. When it grinds up, you're like, oh God, it's got to pull back now. Well, we're grinding down similar to the way that we grind up. And I think it's really interesting and how this is shaping up this type of year. For this time of year, you have a big double-digit gains in S&P and NASDAQ, and now we're just grinding down like we're in this really kind of strong bear market. So the action is kind of hard to read at the moment in terms of, will this stop? When will it stop? Don't be in a hurry for looking for a bottom. What I want to talk about is use the daily Bollinger Bands, 20 period, 3 standard deviation. As long as this mouth is open, I talk about this all the time, I favor the short side. It's really just that simple. And the reason is because volatility is expanding. This indicator with the Bollinger Bands is telling you what the tape is trying to tell you, right? We're grinding down Volatility is expanding, range expansion. When this Bollinger Band finally starts to come back in, and who knows when that's going to happen, and you start to get closed off like we did right here, okay, then we started to rotate back up. That's when you have mean reversion. Until then, it's hard to want to favor the long side. And I want to go to the 3-minute real quick because I know we're running out of time. Every single day, I'm telling you, this has just been so helpful to me, this 3-minute that I talk about all the time. You go in here, you're going to click the high, you're going to click the low. What's the VWAP doing? When the VWAP gets below there, it's a more of a bearish day. And you just look at these standard deviations. Actually, today is interesting at this point because we have a VWAP below the opening range, but the standard deviation lines are flat. Expect a lot of volatility. It's boxing it out for you. We could spike up to 42.12. I probably look at a short. We could spike down to, was it 41.65? I probably look at a small long and just trading the outsides when everything is flat. So it's a tricky tape. I just wanted to give you guys a little bit of color on there. Hopefully today helped you psychologically and when to trade bigger, and stay real patient in this market, everybody. Don't have FOMO. It's tricky out there.
Anthony, thanks for that. And thanks for the look at the market today. I think this is what you call a two-way tape. And you're right. Be very careful, especially on days when we have a lot of events and a lot of volatility, but sideways. Very interesting trading today. Thanks for everything. And great to have you on. And, let's just do this a little bit of business if you can.
Yeah, this last thing is I just want to remind everybody that the CME Group has monthly and weekly micro gold options. Gold has been a topic of conversation lately with these markets. Many of you, gold, the actual big contract might be a little bit too big for you. Don't forget CME's got monthly and weekly micro gold options. I just wanted to make sure that everyone understands that and knows that, because I think it's a much better, less expensive way to go and trade the gold markets if you're interested.
Awesome. Thanks for that, Anthony. And thanks to the viewers for coming by and watching this show. We'll be back at it again next week, this afternoon. I will do the honors of closing out the day at Bar's Closing. In the meantime, have a great trading day.
See ya.